The last 2 decades saw some of the worst accounting scandals in history. Billions of dollars were lost as a result of these financial disasters, which destroyed companies and ruined people's lives. Many of these accounting scandals were a result of the excessive greed of a few individuals, whose actions led to disastrous consequences, which brought down whole companies and affected millions of people. Welcome back to another episode of Facultive Station. Get involved and join the community by subscribing to the channel so you never miss any of our latest uploads. In this episode, we're going to be taking a look at the most notorious accounting scandals ever. Let's get into it. Waste Management Scandal, 1998. Waste Management Incorporated is a publicly traded U.S. waste management company. In 1998, the company's new CEO, A. Maurice Myers, and his management team discovered that the company had reported over $1.7 billion in fake earnings. The Securities and Exchange Commission, SEC, found the company's owner and former CEO, Dean L. Buntrock, guilty, along with several other top executives. In addition, the SEC fined Waste Management's auditors, Arthur Andersen, over $7 million. Waste Management eventually settled the shareholder class action suit for $457 million. Enron Scandal, 2001. Enron Corporation was a U.S. energy, commodities, and services company based out of Houston, Texas. In one of the most controversial accounting scandals of the past decade, it was discovered in 2001 that the company had been using accounting loopholes to hide billions of dollars of bad debt while simultaneously inflating the company's earnings. The scandal resulted in shareholders losing over $74 billion as Enron's share price collapsed from around $90 to under $1 within a year. An SEC investigation revealed that the company's CEO, Jeff Skillings, and former CEO, Ken Lay, had kept billions of dollars of debt off of the company's balance sheet. In addition, they had pressured the company's auditing firm, Arthur Andersen, to ignore the issue. The two were convicted, largely based on the testimony of former Enron employee Sharon Watkins. However, Lay died before serving prison time. Jeff Skillings was sentenced to 24 years in prison. The scandal led to the bankruptcy of Enron and the dissolution of Arthur Andersen. After the fact, the convictions were as controversial as the company's collapse had been shocking, as prosecutor Andrew Weissman indicted not just individuals, but the entire accounting firm of Arthur Andersen, effectively putting the company out of business. It was little consolation to the 20,000 employees who had lost their jobs when the conviction was later overturned. WorldCom Scandal, 2002. WorldCom was an American telecommunications company based out of Ashburn, Virginia. In 2002, just a year after the Enron scandal, it was discovered that WorldCom had inflated its assets by almost $11 billion, making it by far one of the largest accounting scandals ever. The company had underreported lines of cost by capitalizing instead of expensing them, and had inflated its revenues by making false entries. The scandal first came to light when the company's internal audit department found almost $3.8 billion in fraudulent accounts. The company's CEO, Bernie Ebbers, was sentenced to 25 years in prison for fraud, conspiracy, and filing false documents. The scandal resulted in over 30,000 job losses and over $180 billion in losses by investors. Tyco Scandal, 2002. Tyco International was an American blue-chip security systems company based out of Princeton, New Jersey. In 2002, it was discovered that CEO Dennis Kozlowski and CFO Mark Swartz had stolen over $150 million from the company and had inflated the company's earnings by over $500 million in their reports. Kozlowski and Swartz had siphoned off money using unapproved loans and stock sales. The scandal was discovered when the SEC and the Office of the District Attorney of Manhattan carried out investigations related to certain questionable accounting practices by the company. 𝐤𝐨𝐬𝐤𝐞 and Swartz were both sentenced to 8 to 25 years in prison. A class action suit forced them to pay $2.92 billion to investors. HealthSouth Scandal, 2003. HealthSouth Corporation is a top U.S. publicly traded healthcare company based out of Birmingham, Alabama. In 2003, it was discovered that the company had inflated earnings by over $1.8 billion. The SEC had previously been investigating HealthSouth's CEO, Richard Skillshare, after he sold $75 million in stock a day before the company posted a huge loss. Although charged, Skillshare was acquitted on all 36 counts of accounting fraud. However, he was found guilty of bribing then Alabama Governor Don Siegelman and was sentenced to 7 years in prison. Freddie Mac Scandal, 2003. The Federal Home Loan Mortgage Corporation, also known as Freddie Mac, is a U.S. federally backed mortgage financing giant based out of Fairfax County, Virginia. In 2003, it was discovered that Freddie Mac had misstated over $5 billion in earnings. COO David Glenn, CEO Leland Brenzel, former CFO Vaughn Clark, and former Senior Vice Presidents Robert Dean and Nazir Dosani had intentionally overstated earnings in the company's books. The scandal came to light due to an SEC investigation of Freddie Mac's accounting practices. Glenn, Clark, and Brenzel were all fired, and the company was fined $125 million. American International Group, AIG, Scandal, 2005. American International Group, AIG, is a U.S. multinational insurance firm with over 88 million customers across 130 countries. In 2005, CEO Hank Greenberg was found guilty of stock price manipulation. The SEC's investigation into Greenberg revealed a massive accounting fraud of almost $4 billion. It was found that the company had booked loans as revenue in its books and forced clients to use insurers with whom the company had pre-existing payoff agreements. The company had also asked stock traders to inflate the company's share price. AIG was forced to pay a $1.64 billion fine to the SEC. The company also paid $115 million to a pension fund in Louisiana and $725 million to 3 pension funds in Ohio. Lehman Brothers Scandal, 2008. Lehman Brothers was a global financial services firm based out of New York City, New York. It was one of the largest investment banks in the United States. During the 2008 financial crisis, it was discovered that the company had hidden over $50 billion in loans. These loans had been disguised as sales using accounting loopholes. According to an SEC investigation, the company had sold toxic assets to banks in the Cayman Islands on a short-term basis. It was understood that Lehman Brothers would buy back these assets. This gave the impression that the company had $50 billion more in cash and $50 billion less in toxic assets. Satyam Scandal, 2009. Satyam Computer Services was an Indian IT services and back-office accounting firm based out of Hyderabad, India. In 2009, it was discovered that the company had inflated revenue by $1.5 billion, making it one of the largest accounting scandals. An investigation by India's Central Bureau of Investigation revealed that founder and chairman, Ramalinga Raju, had falsified revenues, margins, and cash balances. During the investigation, Raju admitted to the fraud in a letter to the company's board of directors. Although Raju and his brother were charged with breach of trust, conspiracy, fraud, and falsification of records, they were released when the Central Bureau of Investigation failed to file charges on time. BCCI, 1991. The Bank of Credit and Commerce International had over 400 branches in 78 countries and assets in excess of $20 billion. Investigations by financial regulators and intelligence agencies revealed that it was involved in massive money laundering and financial crimes, and had illegally gained the controlling interest in a major American bank. The liquidators, Deloitte & Touche, filed a lawsuit against the bank's auditors, Prince Waterhouse and Ernst & Young, which was settled for $175 million in 1998. After 21 years, 95,000 box files, and £415 million in accountants' and lawyers' fees, the BCCI files were eventually closed in 2012. Autonomy, 2011. The Cambridge-founded company became the UK's largest and most successful software business by 2010. It was acquired by Hewlett-Packard in October 2011 in a deal that valued Autonomy at $11.7 billion, £7.4 billion, with a premium of around 79% over the stock market price. Within a year, HP had written off $8.8 billion of Autonomy's value. The firm's boss, Mike Lynch, is currently fighting an extradition request after he was charged with fraud by the US Department of Justice over the deal. He was accused of having cooked the company's books. For 10 months, he has been battling a separate £4 billion damages claim over the sale of Autonomy in the British High Court. It is thought to be the biggest fraud trial in English legal history. With that, we've reached the end of today's episode all about the most notorious accounting scandals ever. Do you remember any of the accounting scandals in this video? Which one do you think was the most shocking? Get involved and let us know in the comments section down below. If you enjoyed this video, remember to leave a thumbs up. Plus, if you want to see more fantastic finance and accounting content just like this, remember to subscribe to the channel and check out our other socials, such as Instagram and TikTok, that are listed in the video description. As always, thanks for stopping by and watching. See you again soon in the next one.